Good morning, everyone, and welcome once again to the market brief in 10 minutes. We're going to discuss the latest updates, and I believe for the ones that watched us on Friday, you've seen the opening of the market, and we're going to discuss those points step by step. Nour, as we can see, dollar index opened and we're trading at 105.72.73. It's still strong with a very tiny correction from the top. What is the market pricing currently, and why the dollar is still strong before we jump to the rest of the currencies?
Yes, basically, throughout last week, we had, despite the fact that, most of the data came in with, I wouldn't say negative, but weaker than expected throughout the past 2 weeks. But last week, it was only one number that basically kind of changed the mood, which was the flash manufacturing and flash services PMIs from the US. Both came in better than expected. However, but this basically kind of, pushed the idea that the Federal Reserve still has more room to wait before starting cutting. Yet the Fed Fund futures until today, even after the data, is now basically pricing in 71% of a rate cut in September, only 10% in July, of course, and of course over 100% in November and December. So that's basically what kind of just pushed the dollar higher at the end of last week, is because of this data set. It depends on whatever it's going to happen this week. It's going to basically decide more, but I think it's still kind of limited upside to it. And if we are going to say that the dollar is very strong, we need to go over 106 again.
Yeah, so basically the correlation between the interception of the Fed one time, it started to take a proper effect on the market instead of the 3 times that was in the data, which is something that we discussed before, that these are just the numbers showing on the screen compared to whatever is the reality. Okay, so the thing, or the only thing that is taking over the news lately is dollar yen, and as we can see, and we spoke about dollar yen, how it can continue going up, especially after last week close. And as we can see now, dollar yen is at the top, at the highest high since 34 years, and we're trading the 160s, or the levels of the 160, and even we have more comments from the analysts and from the market that this can even cross and continue higher because of the strength of the dollar and the weakness of the yen, and that there's no proper interventions until this second. So we're still expecting this to keep on trending up as long as we are above the moving averages and the major supports that we already mentioned. This is related. Yeah,
they did possibly talked about a possible intervention because the Bank of Japan decision was kind of disappointing for bonds, because they're still they're talking a lot, they're not doing much, and basically the market is not really happy with whatever the Bank of Japan is doing now. I mean, it's about time maybe we will get back to 160, but this is when even Goldman and Morgan Stanley and other banks are expecting a bigger intervention by the Bank of Japan. But who knows if they're going to keep on just basically talking a lot instead of doing.
This is affecting the market as well, the stock market as well. So we see CSI as well not reacting the way that we wanted, and we can see as well that like if we compare the US market with the Japanese market, the stock market, all the strength that Japan had before, it collapsed, and that correlation went back to almost 1% difference, and it was 10% before. So the Japanese market is losing the pace in front of the US market, as we can see. Nasdaq, S&P, and Dow Jones, in particular, S&P and Nasdaq did a small correction before the weekend, and we can see it trading at below 20,000, 19,754. S&P is trading 5,475, and we reached the high of 5.5, basically 5,500 already. So that was one of the things that we discussed as well. It wasn't far away, and we can still continue up as long as the trend is up. So don't fight the trend. That's the most important part.
Although one thing I would like to add about Japan, I mean, it is kind of a losing steam recently, but you know, since the beginning of the year, we did at least in March, the Nikkei 225 maybe as an example was up over 22.8%, but now it's up about like 16%. It is still good, but of course it gave back a lot of its gains.
Exactly.
But who knows what's gonna happen until the end of the year? We still have about 6 months.
Yeah, we still have some time, of course. We still have some time, and most of the intervention will happen at the last quarter. So eventually, we'll see how the market will react to that. Yeah. We need to cover basically a couple of more products because we've been asked about this. Quickly, euro dollar is still trending down, although we did do a correction from the beginning of the week of this week, basically of the day. We're trading at 107 now, but we did a one touch on 106.70. We still didn't break the 106.70, 106, all these levels. So do you still see the same view trending down? Nothing changed till now, or do you see some buyers building up their positions from here?
There are actually some buyers, especially that we did not, you know, we didn't see any kind of daily close below 106.80, and that was the main one. And even the previous week's low, which is 106.70, we tried to test it twice. I mean, it's still we still
holding.
And if you zoom out again, as I said multiple times before, if you zoom out, the euro has been still trading within the same range since February 2023. So it's been over a year and a half, but I don't think so this is going to continue for a long time. But in order for us to say that the euro is basically in a very bearish trend, we need to break these levels at least. And to even get out of the range, you need to get out first below 106. And then to reach all the way down to 104.80, that's when you say yes. Well, the bearish trend is becoming even more. There's more strength to the downside, or there's more pressure to the downside. Other than that, I think maybe the range trend might continue. And the dilemma for FX traders now is basically yes, the ECB did cut first, did not commit to any further rate cuts. At the same time, the Federal Reserve is still not sure when they're going to cut. So the next phase will be who's going to cut first and how fast it's going to be. And this is when we will be able to figure out, where the euro is going to be heading, whether it's going to be trending lower for longer, or it's going to be having, a better chance of revisiting the top of the range.
We're going to keep an eye on the data actually coming up. That will show us the way, basically. The last two topics are silver and gold, and we have a lot of discussions regarding this. Despite the geopolitical tension, despite all the craziness that's been happening, the deals that we spoke about, we can still see gold not reacting in the way that we expect it to be. So there's been a lot of actions actually in the past week, and I didn't see gold bouncing back up from the levels that it should bounce back up from. We're still kind of consolidating in a sideway. It's still holding the 2300 support since more than a week now. It's been 2 weeks actually holding the same support. So till when we're going to keep on reacting like this? And compared to silver, when would we see the move on silver?
Yeah. I mean, the gold at some point, it was during Thursday, we did get like a push at least above the 2,360. That was very limited. The next day, we just erased all of them. Silver did the same thing also. Silver kind of did reach the 30-80, and then we erased all the gains the next day. And I guess this is also related more to, it's a stronger dollar more than it's the geopolitical tensions. However,
but the trends are different.
Silver
definitely. Compared to gold, the gold is going sideways, the silver trending up. We're still maintaining the major support.
True.
So we're going to maintain the same view?
I think so. The most important things for silver, at least, that it is still holding the 11 years breakout, which is, you know, the one above the 2890, 29. That's the most important level to keep an eye on, at least for the for silver. Gold, as long as we're holding the recent, you know, the recent downside, which is the
2300, 23 something,
about these,
or 2280. You're talking 2290, 2280,
which is everybody's talking about it, because they're talking about, you know, the head and shoulder, and that's basically the right shoulder is being just basically, you know, being built, and a break below that, it would basically, you know, turn the outlook to strongly bearish back like during that time, if it happens. Other than that, I think we're still going to be trending, you know, sideways, slightly higher, but we need to break this range in order for us to say yes. You know, either we're gonna keep going lower, or
with the threats of Putin and I don't know if you've seen the discussions and the meetings of Trump and the statements that he's been doing. It's not really the right place where gold and silver are at the moment. Like with such threats from the biggest countries in the world about World War III, it's not a joke.
I mean,
it's been going around nowadays.
It's been going around for long.
Now we're talking about it.
But yes, it's been going for long. But at the same time, this time it's kind of like maybe different. But yes, still, I think there's no need to rush into any kind of, you know, conclusion, or rush into any kind of trades until we see actually a breakdown.
All right. So that's it for today. We're gonna see you on Friday to discuss the rest of the market and whatever happened this week. There's a lot of important news this week. Keep an eye on the news on GBP and USD. We've mentioned them already on Friday. Can give you a brief on it. We have Bank of England speech tomorrow. We have the final GDP, unemployment for the dollar, pending home sales as well on Thursday. And of course, Friday, we have the core PCE, which is very important.
For the
week. That's the most important. So most of the people would be waiting for that to take a decision on the weekly close. All right. So see you on Friday then.
See you on Friday.